debriefed tax webcast series in Asia Pacific. Our webcast today is from our Global Mobility, Talent and Reward series, and it's titled Southeast Asia in Focus, a look at COVID-19 tax relief measures and potential income tax audits. My name is Ang Weiner, and I am a tax partner based in Kuala Lumpur, Malaysia. I have the pleasure of hosting today's webcast. Together with me are three speakers, Cheng Eng Cheng, Manjura Jarugumili, and Michelle Lai. Eng Cheng is based in Singapore, Manjula in Thailand, and Michelle in Kuala Lumpur, Malaysia. You may access their bios on the left side of the screen. Now, before I introduce the agenda for today's webcast, I would like to take a moment to highlight some of the features of our webcast console. First, all users are on listen-only mode. If you have content-related questions, you can submit at any time in the Q&A box at the bottom right of the screen. We'll do our best to respond to your questions during the presentation. Second, all PC users can maximize or minimize each box at your convenience during the webcast. You may explore the icons at the bottom of the screen. If you want to download today's slides and related publications, please go to the Downloads and Links box. On the other hand, mobile users can view the slides and answer the survey on screen. Thirdly, if you need an attendance record for this event, you can download your CPE certificate by clicking the Request CPE icon at the bottom of the webcast console. Right, we'll move to the second slide. Now, this slide depicts a current scenario that we are very familiar. Now, what is interesting to note is where we are so used to talk about the future of work, the reality now is that it may no longer be the future. Whilst work from home may be a very rare arrangement in pre-COVID days, now from a study done with the CEOs, their general consensus is that work from home is here to stay for sure. And from the current peak, they anticipate it will dip when we get into Q1 of year 2022. And this reflects the same on an industry perspective, where you can see the varying degrees of remote work arrangements. With that, as a preamble, let us have the first polling question as a warm-up to our upcoming discussion. Now, with remote work arrangements becoming more common, would you have any concerns at all as an individual or an employer? Now click which of the answer which would be most applicable to you. Answer 1, no concern. Answer 2, some concerns. Answer 3, lots of concerns. Answer 4, don't know, not applicable. Please start to click. Now, Michelle, what do you anticipate the response to be from your recent discussion with clients on remote work? We got Michelle on. Oh, Michelle, are you on mute? Could be some technical issue here. Never mind. Do we have the results from the polling question? All right, let's have a look at that. Interestingly, no concerns at all. Well, a significant 18.1. Glad to see that some of you, a huge 65.9% with some concerns, yeah. Lots of concerns, 14.2, and a very small 1.8 concern. So at least a good majority still think that there are concerns, yeah, which is very aptly, and the agenda for today, very, very relevant indeed. And for the speakers to share with you whether we should or should not have any concerns Now, our agenda will cover 3 countries today: Malaysia, Thailand, and Singapore. Now, we will address what exactly would an employee or an employer be concerned from a remote work arrangement. We will also cover highlights of COVID-19 tax relief measures introduced by the government. We will look at COVID-19 benefits provided by employer and its tax impact on employees. We will also look at audit focus by tax authorities. And last but not least, the Q&A session. I hope, Michelle, it's all right. Michelle, are we able to hear you? I think we have some issues on that. Nonetheless, all right. Okay, then, all right. Then, Manjula, are you able to, let's look at it. I mean, we have worked very closely between even on Malaysia, Thailand, and I'm sure, and together you and I, we have also worked a lot on the Malaysia aspect. Now, would you be able to cover on the Malaysia situation then, as to whether, what are the areas that the employee and employer should be aware of?
Okay, maybe I can speak. Yeah,
go ahead. Yes,
on the Singapore side, while the rest try to connect. Okay.
All right. Let's start at Singapore.
We'll go to slide 9. Given that Singapore's tax regime is on a territorial basis, generally all income relating to employment exercised in Singapore is taxable. And this is regardless of where the employment contract is signed, where the remuneration is paid, or which entity bears the cost. So in cases of employees who are supposed to be based in Singapore for employment, but who are working remotely outside of Singapore, they would remain taxable on their employment income even for the period working outside Singapore. When an employee is taxable, both the employer and employee have income tax filing obligations to the IRS. Due to Singapore's reputation as a relatively safe place to be during COVID-19 pandemic, we have also seen cases of Singaporeans and Singapore permanent residents who are based in foreign countries for employment and foreign nationals working in overseas entities come to work remotely from Singapore. Generally, the remuneration related to the remote work period would be treated as business trips to Singapore and would be taxable in Singapore. The foreign employer thus needs to manage the reporting of remuneration to the IRS accordingly. On this slide, you can see a summary of the employer and employee tax filing requirements. Moving on to the next slide, we see the common considerations employers should be mindful of under the remote work arrangement. Employer and employee concerns include double taxation exposure. Questions from the employer includes, in cases of double taxation, if employees travel due to personal reasons, should the employer bear the additional tax for the employee under a tax equalized assignment? Also, what are the avenues to relieve double taxation? Employers also often consult with us if the Singapore tax clearance process applies for their foreign national employees who are stranded outside of Singapore for more than 3 months during the COVID-19 travel restrictions. So there's also this aspect of employer reporting that needs to be managed. Other employer considerations include permanent establishment risks, as well as meeting immigration compliance and other work pass requirements. I've marked with a red star items that IRS attempts to help relieve with the 2 special COVID-19 tax concessions on remote workers, which I will speak about briefly later. Over to you, Wena.
All right, thank you, Eng Cheng. Maybe from Singapore, we go to Thailand. Manjula, what's the situation in Thailand?
Thank you, Veena. In Thailand, we also follow territorial taxation of income, and all the income that is considered Thai source is subject to tax in Thailand. Here, when we say Thai source, what we are referring to is the income that is earned by work performed in Thailand and the income that is earned by working for the benefit of the Thai entity. Hence, all the Thai-sourced income, whether paid in or outside of Thailand, is subject to tax in Thailand. The only exception being the applicability of the double tax treaty, and Thailand has a double tax treaty with 60 plus countries. The tax residency, that's a physical presence, is the consideration for taxation of foreign sourced income, that is the income that is not related to the Thai employment. Even in case of remote work arrangements, both the employer and the employee obligations, the PA considerations, and the immigrations required have to be applied. And there is no special consideration that is applicable in case of remote work arrangement in Thailand. As for the employer, due to the COVID-19 situation and the government restrictions with respect to the cross-border traveling, there are some concerns from the employer consideration perspective, because if the individual is stuck in the foreign country, because this would give rise to an employer having a PA exposure by the stranded individual in the foreign country. There are no special guidelines that are being provided for the personal PE exposure also in Thailand. Back to you, Veena.
All right, thank you very much, Manjula. Do we have Michelle back?
Can you hear me, Veena?
Yes, Michelle? Yes, thank you.
Okay,
right.
Thank you, Veena. Okay, I think for Malaysia, I think what we need to do basically is really look into what are our basic principles for taxation. Malaysia, we adopt a territorial basis of taxation, which means that income which is accrued in or derived from Malaysia will be subject to tax. And due to the COVID-19 pandemic and also travel restrictions imposed through the mandatory confinement order here in Malaysia, the employees on remote work arrangement has increased tremendously. And it can be actually broadly categorized into two. One is the individual working remotely overseas for the Malaysian company, or individuals working in Malaysia for the overseas employers due to the borders restriction. And this can happen either through choice, whether the individuals return home to be with family, or maybe through external circumstances beyond the control of the individuals, for example, the borders closures. What has happened then is, in order to provide clarity to the individual and employers as well, the Malaysian Inland Revenue Board had issued a FAQ on international tax issues to address the various tax issues that would arise, not just from a personal income tax perspective, but also from corporate tax perspective. There are many various examples that are provided in FAQ as reference for taxpayers, and I would encourage those who are interested or need to refer for these for the details. And such work arrangements may give rise to complexities in very different areas, and some main concerns to think through actually through two perspectives. One is the employer perspective, and that is through the what is the tax resident status of that individual. In Malaysia, it's important because tax resident status determines how much you pay, how much tax you pay, whether top rate tax at 30% or scale rates. And also another consideration is, where do they need to pay tax? Do I pay it in Malaysia where I am, or where I work remotely? And the third one is the filing of Malaysian tax return. Is there a requirement to file Malaysian tax return at all if I'm here or I'm not here working? And from the individual, the last one is double taxation exposure. If I'm double taxed, is there any foreign tax credits, foreign treaty exemptions that are available that I can leverage on? And the second perspective is from an employer perspective. Number one is actually from a corporate tax perspective. Is there a permanent establishment, or PE in short, for the company due to the employees working remotely outside of Malaysia? And secondly, whether the employer tax reporting is required in the new work location, for example, pay withholding, employer withholding, employer filings. And thirdly is the social tax and pension requirements in the other country for the Malaysian company. And lastly, most important, I would think so, is the immigration perspective. Is my employee working legally in the country where they are at the moment? It is therefore, in summary, for Malaysia, that employers, employees, individuals who are in remote work arrangement review and examine the tax impact that arise from remote working. And I think for Malaysia, one point to note that if you want to use a concession under the FAQ, you need to make sure that you make an application for an approval from the Inland Revenue Board. And that's all for Malaysia. Over to you, Wena.
All right, thank you very much, Michelle. So indeed, we can see that the mode of hiring, even on virtual basis, i.e., a local entity can even offer a local employment contract for someone who is not physically here, hiring the person overseas. Now, will there be any impact? Of course, you resolve your hiring resource issue, but there are the other issues as the speakers have addressed, whether it's double taxation, whether there's any permanent establishment. These are the areas that you should be aware of. Yeah. So we have heard on the issues from remote work arrangements. Now let us look into what kind of COVID-19 tax relief measures that are available to help the taxpayers. All right, Michelle, we're not going to lose you again. Let's start with you then.
Okay, sure, Wena. For Malaysia, the Malaysian government has provided various assistance and stimulus package since June 2020. These assistance and stimulus packages aim to help businesses cushion the adverse impact of the pandemic as well as to reduce the financial burden of the people. Many measures were introduced, and I would say from a tax perspective, there are a few areas I think would be important really to highlight to our audience here today. And the first area is the area of flexible work arrangement. Due to COVID-19 and the restriction placed by the government, many were required or are still required to work from home. In order to encourage more flexible work arrangement, the government provided the following incentives. The first one is a tax exemption of 5,000 ringgit to employees who receive mobile phones, laptops, and tablets from their employers. And secondly, from an individual perspective, the government has put in additional tax reliefs of 2,500 ringgit for the years 2020 and 2021 for individuals who actually purchase their own mobile phones, notebooks, and tablets. And lastly, childcare fees relief will increase by 1,000 to help parents who actually needed childcare assistance. And the second area, as you can see from the slide, is from the employer and company perspective. Under these areas, there is a tax deduction allowed for expenses incurred. For instance, COVID-19 tests, the cost of equipment and services for the provision of vaccination centers. And lastly, from an individual perspective, in order to assist individuals who have lost their jobs during the pandemic, a partial exemption limit for compensation for loss of employment has been increased to 20,000 per completed year of service, and which covers the years 2020 and 2021. And on top of that, what we see is the scope of complete medical examination under the medical treatment expense relief has been expanded also include COVID-19 screening and detection tests. These are some of the main highlights of tax relief. Wena, back to you.
Right, thank you very much, Michelle. So over to you, Manjula, for any of the COVID-19 tax relief measures that has been introduced in Thailand.
Thank you, Aina. From an individual taxpayer's perspective, there is nothing specific or related to the exemption that is being provided for remote work arrangement. But this said, there are some provisions that are made in the law with respect to benefit both the employer and the employee. The Thai Revenue Department, which is a tax authority, they have extended the due date for filing the monthly withholding tax for the employers, thereby giving, in case of online filing, thereby giving them more additional time to make the payment. Similarly, from a Social Security contribution perspective, there was a reduction in the monthly contributions which are being made from time to time, and this is being announced by the Social Security Office. From an employee perspective also, the Thai Revenue Department has extended the due date for filing the annual personal income tax return for the year 2020. They are due by 31st of March 2021. If filed online, they have extended it to the 30th of June 2021. The Social Security has also announced for lowering of the contribution by the employee also. So as an example, for the month of June 2021, the maximum contribution has been lowered both for the employer and the employee from Thai baht 750 to a 375, that's Thai baht 375 per month. This said, The COVID-19 financial reliefs that are being provided by the government are, in the month of March, there were a 4-week, 1,000 baht per week was given to the people. It was limited to the registered participants based on the registration and the approval from the fund. Even in the month of August, there was a one-time payment of 2,500 baht that was given to the insured members who were registered for the prompt May with the tax ID, which is available to them. Back to you, Veena.
Thank you, Manjula. Ching, how about for Singapore?
Well, the Singapore highlight includes 2 tax concessions for remote workers, an exemption for employment benefits for accommodation, food, transport, and daily necessities. Well, please note that due to time constraints, we won't be touching on the detailed qualifying conditions of each of these tax concessions, but you can download the slides and refer to slides 17 and 18 for the detailed info. As for this presentation, I would like you to take away the main points that for the first special tax concession, it is applicable only to Singaporeans and Singapore permanent residents who are employed overseas but return to work remotely from Singapore during the COVID-19 pandemic. The concession is applicable up to 30th June 2021, subject to fulfilling the qualifying conditions. With effect from 1st July 2021, the normal taxing rules will apply, and an individual has to appeal to the IRS on a case-by-case basis if he believes that he should not be treated as exercising employment in Singapore, and submit additional information and documentation for the IRS review and consideration. Moving on to the next slides, the second special tax concession on remote workers has expired in the year 2020. It relates to non-resident foreigners on overseas employment who were on short-term business assignment or business trips to Singapore and who were stranded in Singapore due to COVID-19 travel restrictions. In addition to the 2 tax concessions on remote work, the IRS also provided clear guidelines on the non-taxability and tax concessions surrounding temporary accommodation, meals and living expense benefits, or stay-at-home notice related benefits provided by an employer to its employees who are stranded in Singapore or servicing their stay-home notice in Singapore during COVID-19. IRS also provides examples on what are the eligible work-from-home expenses employees may claim as a result of working from home in Singapore. These work-from-home expenses should be claimed as an employment expense deduction when the employee files the individual income tax return. As the applicability of the COVID-19 tax concessions depends on a combination of factors such as the employee's Singapore tax residency, citizenship, period of remote work, etc., we would need to review and evaluate the individual circumstances on a case-by-case basis to ascertain the appropriate employer and employee Singapore tax filing and reporting obligations. Where the COVID-19 tax concessions cannot be availed to, we could also explore the feasibility of claiming treaty exemption or foreign tax credits to alleviate the double taxation burden. Over to you, Veena.
Thank you very much, ladies, for sharing the tax relief measures introduced by your government. Now, which then leads me to the second polling question. Right, polling question number 2. Do you think the measures provided by the government are sufficient? Click which of the answer which you think would be most applicable to you. Answer number 1, absolutely not sufficient. Answer number 2, yes, to some extent. Answer number 3, don't know, not applicable. Please start to click. Now, whilst we're waiting for the results to come in, maybe Manjula, what are your personal comments on this?
We see that some of the remote work arrangement in some sectors are being implemented for the first time. Every government is trying to provide various reliefs to their citizens, both for remote work and also to the prevailing COVID-19 situation. So some of the participants may consider that the relief measures provided may not be sufficient. This said, the governments are providing some of the tax incentives in different forms, as was discussed by my colleagues earlier.
Right, let's have a look. Yep, thank you, Manjula. Let's have a look at the polling results. Wow, okay. Very, very high percentage. Yes, sufficient to a certain extent. A good second following on absolutely not sufficient, about 29%. Interestingly, well, I guess we cannot appease everyone, but like what Manjula said, the governments are actually very empathetic to an extent to want to help their people. Yeah. Now, so having looked at the tax relief measures provided by the respective governments to the taxpayers, let's now zoom into some of the common benefits provided by the employer during this time of the pandemic. Now, suffice to say that whilst it is good intention for the employer to provide some perks and benefits for remote work arrangements, they may overlook some of the tax implications on the employees, arising from such perks. So, Michelle, would you like to share your comments from the Malaysia perspective, please?
Yeah, sure, Weina. Before we dive into the benefits that are provided, it is important for us to provide some context, at least to how income is taxed in Malaysia. Generally, in Malaysia, most of the income and benefits received due to employment are taxable, unless there's some specific tax exemption that is provided for. It is really the nature of the remuneration, the item that is provided, and not really the method of delivery, whether it's in reimbursement or via gift. So the only exception that I can think that we have is that where a particular item is specifically tax exempt, for instance, maybe food and drinks provided where it is said that it is exempt. Due to the Covid-19, we see many employers really providing different types of benefits and really the very creative ones as well to support employees in deferring work from home expenses, and also to provide moral support to their employees. Some of these benefits that we see more and more are, for instance, work accessories, for instance, monitors, laptop stands, home equipment setup, tables and chairs, Grab food vouchers in lieu of annual dinners, food delivery to employees during office virtual events, as well as also subsidy of utility bills. And I think it's really important that for employers to really review the benefits provided to the employees to ascertain whether it falls under any exempted items. And normally where there is a private element, I would say that it may attract tax, and that is something that you really need to be careful on. And then that is for Malaysia. Weina, back to you.
Right, thanks very much, Michelle. How about Thailand, Manjula, on employees' perks and benefits to the employees?
In Thailand, Weina, generally all the personal benefits that are paid in cash are subject to personal income tax. As of now, there is no statutory announcement with respect to reimbursement of expenses if they are exempt for the remote work or COVID-19 that is announced. Generally, all business-related expenses, if they are reimbursed by the company, they should be as per the company policies. And should the expenses relate to the work for remote work or work from home reimbursements, because they are not widely seen, we recommend that the company document and provide and keep the details of the reimbursement to substantiate if there are any questions raised by the tax authorities. Generally, non-taxable expenses are being the business expenses, they should be considered reasonable and necessary. Commonly provided employer benefits being the home office equipment and the subsidy of the utility bills and the masks to the staff. In addition to that, we see that there are some COVID-related expenses being the vaccination leaves that are being provided and the COVID vaccination provided to the staff. And even that there are some immigration-related category items being the quarantine accommodation cost and medical insurance required as applicable. This said, at this point of time in Thailand, there is no special exemption even for the COVID vaccination that's being offered to the employees. So per se, the COVID vaccine provided by the employee to the employees by the company is subject to personal income tax. But from a practical perspective, we see that many companies are providing the vaccination to their employees, and hence this can be considered as employment related and necessary and therefore considered as non-taxable. Even government is providing COVID vaccination to their citizens or the population at large, and it is also being provided free of cost. Over to you, Weina.
Right, thanks very much, Manjula. Then for Singapore, what can you share, Eng Ching?
Generally in Singapore, all employment income as well as benefits in kind that the employer provides are taxable unless they are specifically exempted from income tax under the law or granted an administrative concession. On the other hand, business expenses reimbursed by the employer are generally not taxable. Due to COVID-19, new guidelines were introduced providing clarification on deductible expenses related to work from home. Employer-provided benefits such as temporary accommodation and meals during the stay-home notice period in Singapore. We have also seen employers pay for the temporary accommodation costs for the employee during the 14-day quarantine period in Singapore. Generally, employer-paid temporary accommodation benefit to the employee is taxable in Singapore if provided during the Singapore employment period. However, if the employee has to serve stay-at-home notice, SHN in short, and the employer pays for the SHN costs in the dedicated SHN hotel facility, the hotel cost and meals during the SHN stay period are not taxable to the employee if the travel was made due to business reasons or to commence Singapore employment. However, for the case of a personal trip, the employer-paid SHN costs and meals would be taxable to the employee as a benefit. Where an allowance is given, the cash payment is reportable as remuneration. However, the employee may claim the appropriate employment expenses on their individual income tax returns, subject to the IRS agreement. Regardless of whether the employee received any employer-provided benefits for work from home, if the work from home expense meets all the three qualifying conditions listed on the slide, the expense may be deductible. Referring to the next slide, the first table contains a list of deductible work from home expenses. Please note that for electricity and telecommunication on monthly charges, only the additional running expenses incurred for work purposes are deductible expenses. As for Wi-Fi expenses, if the Wi-Fi was already set up during the work from home arrangement, the Wi-Fi subscription charges would not be deductible. Over to you, Anna.
Right, thank you so much, In Cheng. So, ladies and gentlemen, listening in today's debrief, for the final segment of our agenda today, let us have a look at tax audit. Now, you'll be interested to know how are our tax authorities behaving in this current pandemic. So let us hear from our speakers what is actually trending in the areas of tax audit. Now, Michelle, how extensive is tax audit in Malaysia nowadays?
Yeah, I think for Malaysia, we need to look at the current landscape for tax audit activities. And what we see is it's driven primarily through two areas. One is digitalization, and the other one is actually government collaborations. In terms of digitalization, due to the pandemic, more businesses and individuals start to embrace technology, and digitalization is adopted rapidly in the way they operate in their businesses and use technology in their daily lives as well. This results in information and data being so easily available compared to pre-pandemic times. And from the tax authorities' perspective, we see an increase in the digital efforts by the Malaysian Inland Revenue Board, led to its focus on technology-driven service delivery model, where more submissions are done electronically. And also, what has happened is there's a depth of information through data analytics, for instance, big data, and also the use of risk analytics tools by the Inland Revenue to sift through the various information to gauge the compliance levels of taxpayers and definitely also to identify new tax risk areas. For better all-rounded data quality, the Inland Revenue Board also collects information through collaborations with the various agencies. And one collaboration is the local Malaysian collaboration. And this is, for instance, good example actually, is a collaboration with the Malaysian Immigration Department on data for business travelers. And also from an international collaboration perspective is through the automatic exchange of information, AEOI for short, and Common Reporting Standards. With all these developments, we can say safely that the quality and depth of tax audits by the Inland Revenue has really improved significantly. And on top of this, what we also noted is there is some selection criteria which the Inland Revenue has put in their audit framework, and these are sort of red flags for us. And these 6 possible areas which you can see on the slide are highlighted by the Inland Revenue. Of course, it is not exhaustive and could change from time to time. And we see that a lot of emphasis is placed on computer analysis selection, on targeted taxpayers, and also on specific industries. And these are some of these areas for Malaysia, Rena, that need to be taken note of. And back to you.
All right, thank you, Michelle. Manjula, how about for Thailand?
For Thailand, from the digitalization perspective, the Revenue Department is encouraging people to file more by online, thereby extending the due dates both for the employer and the employee perspective. In addition, they have there are more services that are being offered online by the tax authorities. Like, for example, if you want to obtain the certified copy of the tax return, which is required for extending the visa and the work permit, now it can be applied for online, thereby reducing the visits even to the tax department. From a tax audit perspective, with the prevailing situation that's happening here in Thailand, there are not much at this time. Even the officers are working from home or remotely, and hence they are not on the field to carry out the audits. Hence, we do not see much activity that's happening here in Thailand. Back to you, Ina.
So Manjula, are you happy with the tax authorities being low-key in this period?
Well, this is the good side, that there are not many audits that are being carried out at this point of time. But because they are all on work from home arrangement, we do see that there are some concerns with respect to refund of returns, refunds payable to the individuals, which is causing concerns to our clients. In addition, we also see that, once they are back to field and how they would be working, we don't know what would be the area of interest for the tax department.
All right, let's hear from all right. Let's hear from In Cheng on what the Singapore tax authorities are up to nowadays. In Cheng?
All right. Similar to Malaysia, Singapore uses digital technology and analytics heavily to identify inconsistencies, detect omissions, and anomalies for audit purposes. IRS could also use their database to identify commonly missed compensation items reported by employers through voluntary disclosure exercises. Also listed on this slide are various initiatives by IRS to minimize the risk of taxpayers under-declaring income and over-declaring deductions, and reduces the scope of the IRS in having to identify areas where reporting may potentially be inaccurate. We have the IRS tie-up with the immigration authorities, auto-inclusion scheme for reporting of employment income, and charity transmit tax-deductible donations to IRS directly. The IRS is also able to check the individual tax filings of employees against the corporate tax submissions to ensure that the employer has not erroneously claimed any corporate tax deductions where it has chosen to forego the corporate tax deduction claim to avail some beneficial tax treatment to the individual. In the IRS newsroom under tax crimes, we also see IRS incentivizing the public with cash rewards for an informant to disclose to IRS any tax evasion or tax reporting malpractices they may have encountered. Cash awards are 15% of the tax recovered, capped at $100,000, and payments are at the discretion of the controller. Over to you, Ina.
Thank you, In Cheng. So, ladies, as a leave behind tips for our audience today, can you share what or how our audience can prepare themselves in the areas of audit? Let's start with Michelle, Malaysia.
Yeah, for Malaysia, we are actually on a self-assessment regime since 2001. And we are moving more and more towards a monthly payroll withholding as final tax for certain groups of qualified taxpayers. As a result, you can see that the Inland Revenue Board they're more focused on audits of taxpayers, especially in the areas that you can see on the slides. The onus then is on accurate declaration, and that is on the taxpayer, and which is the individual. And in addition, we see that the employer is really expected to get the income and benefits reporting and declaration done correctly. On top of that, ensuring that the right amount of tax is deducted via payroll withholding on a monthly basis. And if you look at that as a backdrop, we would place a special mention of 3 particular areas which we see that the Inland Revenue has been focused on maybe before the lockdown in Malaysia. And one of them, the first one is actually on the reporting of employer benefits. The second is on directors' income reporting. And the third is the monthly payroll withholding deductions. We have seen heightened audits in this area, and the Inland Revenue Board has been cross-checking information that they have received through many channels. For example, they look at the corporate tax returns that are filed where there is a declaration about a director's income in the corporate return, and they compare it against the individual's tax return and see whether it matches or not. They also start, and I think I can see that many of my colleagues will agree as well, that the Inland Revenue have now a very deeper understanding of industry-specific employee benefits. And they will zoom into these areas, for instance, staff discounts in property sectors. And it is also, therefore, as a leave behind, I think it is important that employers review the tax position that they take in terms of tax reporting as well as withholding, and perhaps to consider a voluntary disclosure exercise where there is a compliance gap. And that's for Malaysia, Wena.
All right, thank you. Manjula from Thailand.
In the past, we have seen that there has been a permanent establishment and company filings which have led to the individual tax issues. We know that people are working remotely in Thailand, and we are not aware of the exchange of information between the authorities, that's the tax and the immigration. This said, if there is a non-Thai citizen who is working in Thailand for personal reason and does not have a valid visa and a work permit to support him, then it amounts to he working illegally in Thailand. The penalties are much higher and severe in case of immigration non-compliance. From a personal income tax perspective also, he has some concerns, because if he has to file a tax return in Thailand, he should have a tax ID, Thai tax ID, for which one of the documents to be attached is a copy of his work permit. So if he's here for personal reason without a valid visa and a work permit, then he would not be able to file tax returns in Thailand. Back to you, Ina.
All right, thanks so much, Manjula. In-Cheng, how about for Singapore?
Yeah, as mentioned earlier, the Singapore tax authorities relies on data analytics as one method to identify cases for audits. Therefore, we will use this opportunity to flag out a few key points which employers and individuals may face during a tax audit. When employers or individuals are picked for an audit, they would usually face the practical challenge of providing data within short notice. Some data may need to be obtained from offshore sources over multiple years, and for those who do not keep proper records, they may struggle to retrieve them. They may need to propose a practical estimate of the understated tax that may be accepted by the IRS. Furthermore, if a tax audit resulted in the IRS uncovering any underreporting or omissions of income, and the IRS decides to publicly publish the negative outcome of the tax audit to make an example of the company or taxpayer to act as a deterrent, the company or individual's reputation may also be impacted. Such audits and negative publicity would also be disruptive to the business. Thus, given that Singapore has a voluntary disclosure program in place, it is recommended that taxpayers should take advantage of this program to make good any underreporting of income before being notified by the IRS on the commencement of an audit. We would therefore strongly encourage employers to perform regular review of their employees' remuneration reporting via Form RAA or R21 health check. This review or health check may be done internally if the company has the expertise and resources to do so, or you can also approach your tax consultants to assist with such a review. Over to you, Ena.
Right, thanks very much, In-Cheng. So for our audience listening in today, you heard the areas of audits. And if we ourselves do uncover areas of, say, underreporting or overlooked income for reporting, now let me ask our speakers, what options do we have? Do we just keep quiet as if nothing happens? Michelle, your comments from Malaysia.
Joanna, under the Malaysian legislation, where there is any income understatement or omission and is uncovered in an audit, the Inland Revenue Board will impose a penalty equal to the tax undercharge. That being said, the Inland Revenue Board remains very open to having discussions with taxpayers on voluntary disclosure. They're not closed, they're open. And to facilitate this voluntary disclosure, the Inland Revenue Board, in fact, has issued an audit framework effective 15 December 2019 to provide guidance to taxpayers on voluntary disclosure in terms of process, penalty rates, and also, lastly, the appeals in case you're not happy with the outcome. Yeah, and if taxpayers go for a voluntary disclosure, of course, the penalty rates have been set out in the framework and is lower than what is normally given under the legislation. If you look at the table, you will see that within 60 days from the due date from the submission of tax return, the rate will be 10% of the tax undercharge. And as you can see as well, more than 60, not later than 6 months is 15.5. And lastly, if you have anything more than 6 months from the time the tax return is due, is 35% of the tax undercharge. And once a tax audit has already commenced, the penalty imposed under the framework will be 45%, and it will no longer be the rates that you see in the table. And tax audits really is unavoidable in Malaysia. It is the Inland Revenue Board's objective that they will audit taxpayers once every 5 years. So everyone has a chance to be audited. And they are definitely on track with this, and they are really looking at continuing these efforts once the mandatory confinement orders are lifted. And therefore, it is important for Malaysian employers to review their internal compliance position, as I mentioned earlier. Firstly, to get the payroll reviews done to ensure that there's actually accurate tax reporting and payroll reporting done at the employer's level. And secondly, from an employer's perspective as well, there are some obligations that they actually need to comply with. They need to make sure that these are done on a timely basis. And that is Malaysia. Wena, back to you.
All right, thanks very much, Michelle. Manjula, since Thailand tax audit is not active, so presumably there's no option of voluntary disclosure or best to remain quiet?
Yes, you're right. There's no specific voluntary disclosure program in Thailand that's announced by the Revenue Department, wherein there are no questions asked and the income is subject to tax at flat rate. Here, the individuals from time to time can file revised tax returns disclosing the full income that is subject to personal income tax in Thailand and pay additional taxes and surcharges as applicable at the rate of 1.5% per month. Normally, if there is a voluntary filing that is done by filing the voluntary tax returns and paying the taxes and penalties, then that is what is the maximum issue. That is what is subject to tax. Normally, there will not be any kind of questions raised by the Revenue Department in case of any non-compliance because it is not an intentional one. We normally say that if there are any positions taken by the company, it has to be documented so that should there be any questions raised by the Revenue Department, they can be referred to. If the companies or the individuals would like to address any past non-compliance issues, we would look and provide an options on a case-by-case basis and weigh the potential risk versus the risk. So from there, the client can determine what is the best suitable solution for him, and that's what he's comfortable with. Back to you, Venu.
All right, thanks very much, Manjula. And Eng Cheng for Singapore?
Yes, IRAS encourages taxpayers to come forward voluntarily to declare and make right any past errors. IRAS allows a 1-year grace period and no penalty will be imposed if taxpayers correct their reporting within 1 year from the statutory filing due date of 15 April for individual income tax return. So if the taxpayer makes right a Y 2021 income tax reporting, they may do so latest by 15th April 2022 without penalty imposed. After the 1-year grace period, taxpayers may qualify for a reduced penalty of 5% of the tax undercharged for each year after the grace period the error was late in being rectified. The taxpayer is considered to meet the qualifying conditions for voluntary disclosure under this concessionary penalty rate if the taxpayer makes the disclosure prior to receiving a query or notification from the IRS indicating a commencement of an audit or inquiry on the income item. Also, under the voluntary disclosure program, the taxpayer must fully cooperate with the IRS to correct the errors and pay the additional taxes and penalties by the dates agreed with the IRS. In addition, the taxpayer must inform the IRS the corrective process going forward to prevent similar errors from recurring. Under voluntary disclosure, a taxpayer would generally be required to make good the tax reporting up to 4 back years of assessment. The concessionary rate of penalty would generally be capped at 20% for any errors or omissions relating to 4 back YAs. Do note that IRS treats cases of willful intent to evade taxes very seriously, with potential prosecution, jail terms up to 7 years, and/or fines up to $50,000. and tax penalty of up to 400% of the tax undercharged. However, if the taxpayer missed the qualifying conditions for a voluntary disclosure at the 5% concessionary penalty rate, that is, they received an IRS inquiry letter before they have the chance to disclose their errors, then the IRS would generally impose a penalty of 200% on the underpaid taxes, assuming there is no fraud involved. Therefore, it is recommended for taxpayers to come forth voluntarily and disclose to IRS if they are aware of any incorrect reporting in the past. Over to you, Wena.
Thank you so much, Incheng, Manjula, and Michelle. So this brings us to the end of our today's discussion. Now we have some time to respond to some of the questions from our audience. I see a few coming in. Michelle, any question that you have picked to share?
Yes, sure, Wena. There are a few, and I picked one of these. The question is, I noticed that as you speak, that there was a FAQ tax concession in Malaysia for stranded employees. Is there any deadline to lodge an application for approval to the tax authorities? Well, there's no deadline actually stated on the FAQ. It doesn't say anything, but we would recommend that the approval be obtained to be submitted and obtained before the tax return is filed, so that you actually have the confirmation of the position that you want to take. And if that's not possible due to circumstances, it can be done and it should be done as soon as possible. Yep, that's for Malaysia. That's the question, Wena, for Malaysia.
All right, thanks, Michelle. Manjula, any question for Thailand? I think I saw some.
Yeah, an interesting question is that what are the considerations for the companies to consider before sending expats to Thailand in the given scenario? So because of the COVID situation that is prevailing, we see that there are more immigration requirements that have to be taken care of in this COVID era than during the pre-COVID time. So the requirements being that adherence to the 14-day quarantine upon arrival to Thailand. So it's a mandatory requirement which has been required by the authorities here. Obtaining a certificate of entry from a Thai embassy overseas. This is an important consideration because this would take some time and a lot of coordination is required in this process. And also the medical insurance covering for the COVID treatment in Thailand. So all these would take additional time, and it's also the cost is involved in the process. All these have to be taken into consideration before sending expats to Thailand. Back to you, Wena.
All right, thanks very much, Manjula. And Incheng, I see plenty of questions for Singapore. Pick the one that you like.
Okay. Yeah, here's a question. When Singapore was addressing briefly on the double tax exposure on remote work overseas, Singapore did not mention about availing the NOR tax concession on time apportionment. So is NOR not relevant anymore? Well, okay, this is a good question, so thank you for asking. The NOR time apportionment tax concession may still be relevant for individuals whose NOR status has not expired or who are still able to apply for the NOR status. The NOR scheme has ceased from year 2020, meaning that new arrivals to Singapore from 2020 onwards will not be eligible to apply for the NOR status. One of the conditions to claim this tax concession is that the NOR individual should have spent at least 90 days outside Singapore for business reasons. However, please note that IRS has provided guidelines that if an individual has initially traveled out of Singapore for personal reasons and continued to work remotely from overseas after that, the days spent overseas for personal reasons will not count towards the 90 business days requirements under the NOR tax concession. So only the business days may be counted. Thus, when evaluating if the NOR individual qualifies for the time apportionment concession, the individual's facts and circumstances would need to be considered. Over to you, Wena.
All right. Okay, thank you so much, Incheng. And then we move, let's say, back to Michelle again. Michelle?
Yeah, okay, let me pick a second question. Okay, another question that's come up is, everything seems to be taxable in Malaysia. Is it possible to get a confirmation of the tax treatment of some of the benefits that my company wishes to give to employees due to COVID-19. These are COVID-19 specific benefits. Okay, I think for Malaysia, we can actually write into the Inland Revenue Board for a ruling in case that you have some items that you feel that there's not really a private element involved, and you want to the Inland Revenue give you a confirmation that such a benefit will not be subject to tax. So we call it a private ruling. So you can actually write into the Inland Revenue Board to get such a confirmation if you want to. It's not a no-go at all. Yeah, so it's open. Back to you, Wena.
Okay, I think we still have time maybe for just one more last question. Eng Cheng, seem to be very, very hot for you.
Okay, if Singapore PR is based overseas and drawing salary in Singapore, he is not able to return to Singapore due to COVID-19, whether he will be considered as resident for tax purposes. Okay. Okay, so as mentioned earlier, the whether you're drawing a salary or not, it's basically whether you're based overseas. So there are certain conditions to qualify, right? So it depends on how long you have stayed as well. If it's if this individual has returned to if the nature of the stay is temporary in nature, and if they have met the qualifying conditions and they returned to where they are based overseas, when the COVID-19 travel restriction has been lifted, then there is a tax concession available, right, for 2020. So there are a number of requirements to be met. But it's very important that it's due to COVID-19 travel restrictions and it is temporary in nature. So I think for further details on the qualifying conditions, it's important to look at the slides to download the slides and take a look at what the details are. All right, over to you, Wena.
Thank you so much, Eng Cheng. So unfortunately, ladies and gentlemen, that's all we have time for. So Eng Cheng, Manjula, and Michelle, thank you. And special thanks to all of you who were able to join us today. Now, we would like to encourage you to please fill out the short survey that will pop up on your screen momentarily and tell us what you think about today's program. Now, if you join us late, please note that this presentation will be archived for future viewing. Now, if you feel that others will benefit from this webcast, please also share the webcast via the share this icon, or have them visit the debrief website. And we will respond to all the questions submitted during the webcast in a couple of weeks. Yeah. And if you think you have any other questions or comments later, please do feel free to reach out either to me or our speakers. We'll be more than happy to speak with you. Now, last but not least, also please don't forget to tune in to our next scheduled webcast from the transfer pricing series on 26 August, titled FinTech in Asia Pacific, Tax and Transfer Pricing at the Intersection of Technology and Financial Services. And last, from all of us in Deloitte, thank you for your participation in Deloitte's Asia Pacific Tax webcast today. Goodbye.